Hello, good morning. This is Jessie, live from Seoul in Korea from KBW. Here we have Mike Cahill with us, CEO and founder of Pyth. And yesterday you just shared a big news on the launching of Pyth Pro. Do you want to share a little bit more about that?
Doing today. So Pyth right now supplies data in an encrypted way on blockchains. It's an oracle so that people can use it in smart contracts. It's available over 100 different blockchains. Almost 700 different applications have been built using it. That has been sort of phase one, and that's what we've been building for the last 4 years. So Pyth Pro is our first opportunity to now go beyond blockchains. So the greater financial market, we think that both the decentralized market, blockchain market will continue to grow, but we also think that traditional markets aren't going to go away. So what's really exciting about this is now we've basically packaged Pyth data, which is what we've been mostly using for distribution auction. We packaged that up in a way where traditional markets can now access it. So it's a subscription. It's more performant than what we initially built for blockchains. It goes down to 1 millisecond update times, highly optimized from a latency perspective. So we've got co-location and we've got close to the certain exchanges. And we're starting to port over all of the symbols that were on the previous version of Pyth over to Pyth Pro. So Pyth has got over 2,000 symbols today across equities, FX, interest rates, obviously crypto markets. And now that's going to be made available to this wider audience. So who uses it? So we've got Pyth Network has got a long-standing relationship with these institutions. Institutions provide their data, and it's been trading firms and exchanges, and we pay them Pyth tokens to provide their data and to generate these benchmark prices that are used. And so now they're going to be able to buy that data directly, and it'll expand from not just trading firms, but we've been talking with all the major banks and creating these pilot programs for them to start figuring out how they want to use the data.
That's super exciting stuff. And talking about making the world's data on chain, you guys also announced the partnership with the US Commerce Department, and Lotnik also said that the US data should be immutable and globally accessible, and that's very aligned with your mission there. Can you help us peek behind the curtain a little bit and see how the deal coming into play, and what are some of the initial applications that you're most excited about?
This is so cool, and I would never have anticipated this happening. So I've spent a lot of time in DC with the new administration, and we've been trying to educate as many people as we possibly can on how blockchains work, how oracles work, how we can strip out some of the inefficiencies of the traditional markets, and there is a whole bunch of years now. Yeah. And I would say that I give a tremendous amount of credit to Secretary Lutnick, because he lived through, in his days at Cantor and BGC, the transition from the open outcry market or voice market of the treasury business into the electronic market. I think he saw this as, right, this is cutting out the middlemen and making things more efficient, and basically mobilized his team to start working with us about 3 months ago to be able to make this happen.
It only takes 3 months.
Well,
government efficiency, right?
These guys are like all ex-business people who are now in the government, and they're very, very impressive. And so we were able to create first the proof of concept, which is the GDP on-chain. Why is that so important? So is an indication that government data is going to permissionless blockchains. That's the big deal. Because every time a government has done something in the past, it's always been a pilot program that has been super small and super permissioned and not ready for scale. This is out there. This is on 107 blockchains or so that Pyth is on, and it's fully composable. That to me is a huge thing, because it's endorsed by the government, right? They said that this is our data. We work very closely with them to publish it. The second phase is we've expanded that data set. So now we don't just have GDP. We initially launched with GDP going back 5 years every quarterly. We update it, of course, as it updates. And so we launched it on the day of the Q2 update. 3.3 was the latest one. We've expanded to unemployment data, non-farm payroll, a bunch of the stuff from the Bureau of Labor Statistics. What's cool to me and where we're going next is the government has shown this emphasis on radical transparency. And we think that we can help improve that process even further by applying this principles-based model, like we've done with Pyth, to accumulate data in a more streamlined manner. I'll explain that for a second. So Pyth has been started from, instead of buying data from NASDAQ or buying data from the New York Stock Exchange, let's go create it from first principles. Let's get traders to publish, let's get exchanges to publish, we pay them both, and we create this price. From the government, they're mostly relying on upstream services like the census, and a lot of these are, while they're modernizing, they're still relatively entrenched in how they've been doing things for many years. They love the idea of this model being able to be more transparent if we can incentivize, for example, a business to be able to provide their data into something that now has the higher frequency of being able to be updated, maybe it's more accurate. So there's a spirit of innovation that I think that they're embracing that allows them to sort of modernize things.
Oh, that's super interesting. What about some of the data from like the polymonarchies of the world, right? Because there's like literally consensus data that's being created like by the minutes.
Oh, absolutely.
Is there any chats over there?
We're very much aligned with the prediction markets, both on-chain and beyond the blockchains. We'll hopefully have stuff to be able to say in this. I'm nothing to announce now.
It's a big,
It's in a market that we're aware of and want to work closely with. But yeah, like when we think about the use case, because you asked the question, like, what do you use?
Yeah, exactly.
For?
What are you most excited about?
Yeah, and I think one of the biggest skepticisms that people had is like, okay, what am I going to do with the GDP on-chain?
Yeah, exactly.
The short answer on GDP on-chain is people are going to bet on it probably.
Yeah, exactly. That's literally what comes into mind.
But the longer one, I think, which is not what you're already betting on with like the FX market.
We're actually tracked down on SoSoValue.com.
Great.
Yeah.
So the thing that I think is most exciting is it gives us those like slightly more sci-fi use cases that people were excited about 10 years ago, which is like, I'm going to go put my mortgage on a blockchain, those sorts of things. Well, now you can, if you've got, Fed funds rate and you've got reference rates that are existing on chain, you can actually have your mortgage go and point to this and, have it be sort of permissionless. Those are the types of things that I think we allow. It doesn't happen overnight, they build up, but people start to figure out what you can use this data for that you were previously relying on a banker or a lawyer or some accountant or combination of those administrative services that you could probably cut out.
Right. So Pyth has an idea of cutting out all of the middlemen and the market data.
Yeah, I like to think that we are making markets more efficient, but the consequence of that is we're including many more people. And it's just like every other technology where like unit economics go down. Like I think about Pyth Pro as the Spotify of market data. And so it's like this one kick-ass subscription, it just keeps getting better, right? When you pay whatever it is, your $10 a month to Spotify, you don't pay more or less if they've added in Beatles songs and if they've added in all these others. You just still pay that and they're going out and trying to make it great for you. That's what Pyth Pro is designed to do. It's like you just pay for Pyth Pro, we just constantly add more and more symbols in there to make it better for you. And as a result, like now billions of people have access to Spotify. Like it went from people that never bought a CD in their life to now they're participating in the music economy. We think that that's going to be it. We make things more efficient, but you grow the scales. You actually probably grow the entire revenue for the entire industry just because you've included so many more people.
Yeah, that's a perfect point. And I love the analogy of Spotify because in a Spotify of the world, it really revolutionized how creators and musicians are paid, right? And I'm curious to hear, like, because you already have a live token, how does it play into like scaling the business and like using the tokenomics to grow tech, the business side of thing, and then value capture, right? Like from the data provider to the consumer. Yeah,
it ties it together. So, one of the biggest innovations for like the crypto market is you have this token and you can incentivize people to come in. And so that's how we're able to incentivize the supply side of the network. What's cool with selling now subscriptions is we sell them in dollars, stables, or Pyth tokens. And so that money goes back into the DAO, and then the DAO can do with it what it wants. And that could be buybacks, creating a reserve, could be distributions. So you create that full like closed circle economic flywheel for the entire ecosystem, which is great.
Is it going to be a discount with Pyth token purchase?
It could be. Exactly. It's a good idea.
And what happened if there's like a Taylor Swift kind of figure in the world where they're not selling you or not willing to participate into that world? Like, have you encountered any roadblocks like that, or what do you think is like the biggest roadblock for Pyth's vision to bring their world?
Yeah, a really great question. So we actually have got two businesses within Pyth. So there's our data business, and that data is going to accumulate as much data as we possibly can. But there's going to be limitations, right? There's going to be some diva in there that says, I'm not going to contribute my data. I'm going to sell my data because it's the only one that has it in the world, and I'm going to sell it on my own. So we actually have this distribution business, which is distribution of the blockchain. So when you think about like what was our partnership with Department of Commerce. Well, we didn't go and replace them and start getting the data from them downstream and like now we report the GDP.
Right.
We just allowed them to publish that data over the blockchain. So those sorts of like snowflake style data where it's like 1 in a million, we're the only one that has it, highly valuable. They're going to use our distribution network to make that data available. So we'll start to announce big partnerships on this side as well for highly valuable, highly specific data sets to then be made available to be purchased and brought on chain. And so that'll be our distribution business. So I think those things, we cover everything. So we've got all types of data. If it's relatively commoditized, you should put it into Pyth Pro. If it's very, you should distribute it yourself and let people buy it on blockchain rails for, Pyth distribution.
That's super interesting. And then one way that SoSoValue and Pyth work together is for our asset management on chain. And SoSoValue indexes were built right now of a TV of 200 million on chain. Right now we're selling 4 tokens. And in the future, we want to be able to allow everyone to have access to our index creation tool, meaning that you can compile everything like BTC plus tokenized NVIDIA plus gold, for example, to have a triple gold index, for example.
Yeah.
Or Mike, you can create your own index as well. They have a Pyth angle to it. But one of the biggest roadblock here is like, how do we bring more, how do we bring more premium grade assets on chain, number one, and then how do you have to combine all of those different assets and have a real-time market data source for it. And since you are working with all of these issuers and different infrastructure elements within the ecosystem, how far do you think we are from that vision of just being able to create freely from what we have in the world?
I think we're close.
Okay.
And I love the vision. And I think that, you and I were talking previously about how does this transform like the asset management space? And I think it's, huge. There are more ETFs than there are underlying equities today. And like that data point is like highly indicative. This is a product that people want, like people sees.
In the long run, that's how investors win.
Exactly, yeah. So where the bottlenecks, as you say, like I think that we hope to be able to clear the data bottleneck for you very quickly. So we've gone from 400 or 500 symbols last year. We'll cross 3,000 this year. Next year, we'll hope to have 10,000. And then the following year, I hope it's 100,000. Because every time we add a new node into the Pyth network as a publisher, it makes it easier for us to like add arbitrary symbols. If we wanted to add like stocks in Korea, like that's very simple at that point. So I think that hurdle is going to get cleared really soon. Okay. And then whether or not you're like the custody stuff, I think you've already figured out a lot of this custody stuff. So I think we're really close and people want this. And I think that this is one of those areas where it's more efficient than an ETF. Liquidity is easier to be able to bootstrap than an ETF. Like doesn't have to only go through an order book. You can use a variety of things. You can use Oracle AMM order books. You can do all the stuff on chain that we've learned how to do over the last 15 or so years. So I think we're pretty close.
That's super exciting. And I guess next.
Oh yeah, you guys are crushing. These are running on you. I'm just getting like kind of wonky if you're into that.
Yeah, I like that. That's very like Christopher Doyle way of like.
Oh, well, you dropped Christopher Doyle on me. Right?
You're channeling that. I'm thinking, what's next? We're gonna talk about. Is there anything else that you want to highlight?
Oh, I think we nailed it.
Yeah, I'm just thinking because you guys existed for so long, like 4 years is like 400 years.
No, seriously.
I just want to like see if there are any differences you see in this full cycle.
Yeah. So the market's a lot, right? Yeah. So and I'll summarize it into like what Pyth had started as and where we are today.
Yeah, I like that.
So we started on we're going to be the Oracle for all blockchains. And we're going to be on the fastest chain. So we built everything to be on Solana mainnet.
Yeah.
400 millisecond block time. No one's ever going to be faster than that. It's got most, the biggest place. And 1,000 transactions per second. No one's ever going to have more than that. And so we were for many months, 75% of the block space on Solana. We had to then go move off. And so we moved from public Solana mainnet to PythNet, which was a private version of Solana. Not private, but it was an application-specific version of Solana. It didn't have a share at one time, or any other applications that were running on it. So that was good, but still 400 milliseconds. So, over time, that becomes less and less competitive if you're sub 100 for Hyperliquid. We're just seeing performance requirements go down or go up, and the times come down. So I think when we moved over to this Pyth Pro architecture, we got down to 1 millisecond. That was a lot of optimization. Yeah. So that's where I think we're currently are. The state of the art right now is you have to be sort of asymptotically approaching 1 million transactions per second, and you need to be getting your block times down to probably sub 50 milliseconds to really be competitive at the upper echelons of what people want to do on chain. And so, Hyperliquid kind of came out of nowhere for a lot of people, and now it's sort of being challenged as well. It's not like we've seen the end state, I don't think. There's still room for experimentation.
There's so many DEXs just in Korea.
Right, and as of time of filming, we've got lighters, past them on volume this week,
exactly.
and it's still a open game for someone to win, and it's just the bar just keeps going higher. I think that we'll still see that happen. We need to continue to push the boundaries for what we offer, and that's why we got down to 1 millisecond. But everyone else does. Blockchain's going to be pushing the boundaries on how fast they can be. Even finality to a certain extent needs to get pushed out, and trading capabilities, and then introducing novel features the index or asset management style products. That stuff is hugely important. So I would say that we've come a really long way, but I think we still have a long way to go. First benchmark will be what's the percentage of DEX versus SEX volume, and obviously that trend is growing.
Right.
And I think
even
go
SEX
really
is moving on DEXs, right?
Even
Bybit have their own viral.
Yeah, exactly.
Binaster and something else. Yeah.
Exactly. So I think it'll happen. I think by next year we'll see a big cut out of the market share for on-chain trading.
Yeah.
And that's a really exciting thing to have happen. And then we'll start to get sort of that feature competitiveness, where people are now adding in features that they didn't do on centralized exchanges in the past.
Yeah, 100%. And here's a shameless plug for SoDex. We're launching SoDex AlphaNet in a few weeks of time. That's built on our own proprietary layer 1 core value chain. And it's supposed to be, we already have 200,000 applicants for the testnet, and we're only allowing in 20,000. And what we see traders has been doing on the testnet has been quite incredible. And one of the vision is for our indexes to be able to be both in the club, centrally with order book on the spot, and the perps. Because in the traditional financial, we already see speculating on indexes has been one of the biggest use cases of perp or futures trading, because it's harder to manipulate. It's broader sector base. So that's what we're really excited to launch on. And I think that there was a lot of angles to collaborate with Pyth here.
Absolutely. We're excited for you. We're excited to be partnering on so many things today, and hope to continue to expand it in the future.
That's so exciting. Thank you so much for your time.
My pleasure.